Good day traders, Richard Jacobs here and welcome to this week's Underdog Perspectives video where we look at the local market, reflect on the week that was, and more importantly take some views on what we are seeing playing out in the market over the next week. Now for those of you who watched last week's video, we've got up on the screen, we've got the chart of the top, the daily chart of the top 40 index. And for those of you who followed us from last week's video, you'll remember that one of the things we'd been eyeballing was really this overbought stochastic here, and we said that our expectation was that we would have some kind of a consolidation or retracement back into the breakout level of this falling wedge or downward sloping channel structure over here. And it's quite interesting to see that we've actually had that pullback, that retracement all the way back into that breakout level, and the market is actually just consolidating over here at this or round about this breakout level. Now from a structure point of view, this is actually, despite the fact that we had this retracement Wednesday, Thursday, Friday of last week, this is not a bad position for bullish traders to be in, because what we've seen also is that the stochastic has worked off a huge, or most of its overbought condition, and in fact it's now starting, not quite, but it's approaching that level where it's looking to get to be oversold. So if we can see that playing out, we have another maybe day or so of consolidation and we end up in an oversold condition. This would be a great opportunity to start looking for some kind of a reversal either on the daily or on a shorter term time frame for that move back in the direction of the trend. In other words, if we saw something like this pullback over here, and we highlighted this last week as well, we would now be looking for some kind of a reversal, maybe on Tuesday, Wednesday even, for the move. Let's just fix that up, for the move back to the upside. And then the other thing we said was, where would we expect the market to move to? Well, really we'd be eyeballing this level around D over here. So let's call it coming in around about 46,800, 46,900. That would be the level we'd be looking for this market to move. So it's actually starting to line up a pretty decent looking trading opportunity if we can get all the variables in place or aligned. So bit of consolidation, a clear reversal sign, candle, maybe a bullish engulfing candle, or some kind of a doji of oversold conditions. We could put our stops in below the swing low, try and get involved in this trade and try and ride it all the way back up to that swing high level over there. So that's something that's certainly worth eyeballing if you are a trader who likes to hold positions over multiple days. Now the other thing we also have a look at is just in terms of our volatility. This is our average, our normalized average true range. And what's worth seeing here is that we did have an improvement in the ATR sort of midweek, but then it sort of died down again into the end of the week. So some signs of life returning to the market, but really the absolute levels of this ATR remain exceptionally low. Our preference is to wait to get to around about this 16 level, and it can take a long time. It can take months before we get there, but that's where we really start to see some great trends developing in the market again. So certainly something to keep on the radar, and we'll keep an eye on it as well. If we'll then do our scan around the world and look at a couple of other markets, or what we regard as really relevant markets impacting on our top 40, what we have up on the screen at the moment is the weekly and the daily three-line break charts of the USD versus the Rand. And I mean, you can see the Rand's been pretty relentless in terms of strength. It's just pushing to stronger and stronger levels. At the moment, we had a weekly close at about 12.43, and just looking left, that's the best close we've had since about March 2015. So we are at really strong levels at the moment. Where do we see this thing letting up? Well, if you're a trend continuation trader, from a rand perspective, you're just going to keep looking for an opportunity to short any rallies over here. But there is a bit of structure approaching, coming in around about this 1232 level. So the rand would need to put in a daily close below that to break through that level, and then you've got another bit of structure coming in around about the 1210 level. But at the moment, there's nothing that says that the end of this bullish rand run is in sight. Remember, from a fundamental perspective, we're starting to see more, I think, less of the political uncertainty playing out in the local market, and that's being amplified to a certain extent by more political uncertainty happening on the US side. So you've got these two factors working in unison to really push this rand stronger and stronger. From a top 40 perspective, of course, the preference is not, from a bullish perspective for the top 40, is not to have a stronger rand. So the stronger rand does tend to hold back our local market movement. So one just needs to bear that in mind. And we'll come back to that when we summarize where we see the market moving over the next week. If I jump then over to the US, and this is the S&P, again 3-line break charts on the weekly and the daily basis. The weekly is just as strong as it's been over the past few months. It just continues to push higher and higher. We haven't had a weekly break of or a red 3-line break candle since, wow, when is this? October 2016. At the moment, our 3-line break level would come in right there at 23.16. Market's at 23.46 at the moment, so still well above it. But what we can see is we did have that break on the daily chart, so a bit of a retracement, and that's important to note. Whatever weakness we see or are seeing on the markets on an intraday basis, on the S&P market on an intraday basis, needs to be looked at in the context of what this market has been doing, and on a daily basis at least, all that we're seeing is a retracement starting within a very bullish trend. So obviously that, if one is trading on an intraday basis, there are different ways of viewing that and saying, US market weakness on a daily basis, this is an opportunity for us to maybe do some intraday short trading. But within the context of the bigger trend, bear in mind that this is just a retracement within the bigger trend that we are seeing at the moment. If I skip over to the gold market, gold's been a bit more or a bit less trendy, more choppy. On the weekly basis, we had this breakout in February, a retracement, continuation in the direction of the major trend, all the way up there, and then the market started to roll back over again. So gold's a bit messy at the moment. We've put in a break, a retracement, and then we put in a lower high. So new structure high followed by a lower high, not too pretty on a weekly basis. And you'll see that the last 3-line break candle printed on the weekly chart at least was on the around for the week to the 6th of March. So again, what that's saying is we're seeing a bit of sideways action happening in gold over this month. So a bit of a range bound story playing out there. If you look over at the daily chart, again we've got this bullish move here. Market retraces, then pulls back, then breaks out to the upside, retraces, and then continues to the upside. So we're still seeing this upside continuation happening, and really what the bulls will be looking for is, or the gold bulls, is to push this market through this 1257, 1260 level as the next move up, because that'll just really confirm or solidify this bullish trend with higher highs and higher lows being printed over here. And obviously then that would need that would result in a break of this or continuation of this move on a weekly basis as well. But at the moment, overall, gold's a bit choppy, slight bias to the long side is what we would or how we would analyze this market. If you look at oil, oil again, um, weekly basis, higher highs, higher lows, and we are in retracement. Exactly the same things happening on the daily. You've got higher highs, and it's in retracement. So oil is one of those interesting ones where the market overall remains bullish, but it is in a retracement, which on the shorter term time frames could be holding things back. So just running through those markets again, I mean, we've got oil bullish but in retracement. We've got gold choppy but with a bullish bias. We've got the S&P. It's bullish, but again, there's some daily retracement and shorter time frame retracement happening over here, and we've got a strong rand just pushing the market along. So again, it's very similar to last week in the sense of if you look at that analysis in the context of our structural analysis, it's essentially saying that yeah, we've got some bullish price indicators playing out in the market at the moment, but there are indications that we're going to still continue to see this consolidation playing out, which again, plays pretty well into the space of what we're saying, what we're seeing when we look at our price structure, because even from a bullish perspective, we wouldn't be unhappy to see a day or two more of consolidation just to get that stochastic into the oversold condition, and then some kind of a reversal, some kind of a catalyst to cause this market to reverse and push to the upside. So that's what we're looking at for the week ahead. Guys, as always, I'm happy to take your feedback if you find this commentary useful, or other things that you want us to look at. But if you do find it useful, feel free to hit that like button under this video. And yeah, have a great trading week, and we shall chat again next week. Cheers.